Welcome.
Hi, how are you?
I'm great. How are you?
Doing well.
Super excited to have you on today.
Thank you for having me.
DeAnna Rivera, everyone, with Community Lending, founded in what?
2011.
2011. So you've been doing this for quite some time.
Yes, sir. Actually, before 2011, I've been doing this. So for about 25 years.
Holy moly. We're getting old, I think.
Yeah, that's why I'm going to rename the podcast to Menopause Mortgage. Get your mortgage done in a hot flash.
Menopause mortgage. I love it. That's very catchy.
It is kind of catchy. I might get a T-shirt made.
Well, the bottom line is my clients love you and we love you. You're an absolute expert, and I'm so excited to have you on the podcast today.
I'm very excited to be here.
So we got some great stuff to talk about, and I just want to start off by, talking about what's happening here nationally in the United States that everyone's talking about, and get kind of like that real estate mortgage spend on everything. You know what I mean?
Yep.
So what do you think's going on with, how do you feel about all the Trump, Elon Musk, Doge? Let's talk about what Trump's doing right now. And
As far as Doge and the government spending and cutting all of that. So
yeah,
I think it's good to be audited.
It's good to be audited.
It's good to be audited, whether we audit our own businesses or we audit our own life or we audit our government spending. I mean, it's our taxpayer dollars, right? So we kind of want to know where it's going. I think for the mortgage industry, the real estate industry, when we start to cut out wasteful government spending, I think it could yield to more money in Americans' pockets, which then yields to more people in the market. I think we have to go through some pain to get there. I don't think it's going to be instantaneous because you start to bring in stuff like tariffs, and does that raise the cost of things over time? Sure, it does, right? But then the end result is that we bring some of the manufacturing back into the country, and people get more jobs, and more jobs equal more income being brought in. More income means more people buying homes.
Let's peel that back a little bit, because I saw an interesting headline today where the European Union is wanting to put tariffs or increase the tariffs on wine and or whiskey coming into the U.S.
I'm so screwed. What do you mean? My wine's going to cost more?
I guess, coming into the country.
Stop it.
So Trump responded that he was going to put tariffs on them. Obviously, we're going to increase the tariffs on their goods coming in, which would be the wine and the whiskey or whatever, however that works. So, it's obviously a trade war, but he said it would do good. It's really good for our whiskey makers here in the country.
So
right?
Go right back to Kentucky.
Yeah.
Everything goes back to Kentucky.
Yeah. Everything goes back to Kentucky. We need to make some scotch here, although I don't know it would be as good as the Irish scotch, right? But yeah, that's kind of interesting. But I like, just to peel back the layers, if you can explain your thought more on how that helps us in terms of manufacturing here. So like as in a real life example.
So real life example is if we're getting our lumber from Canada right now and it costs X and we raise tariffs, does that incentivize a company to open up a lumber yard here? And are we bringing more jobs back into our country? And employing more Americans? Yeah, the pain of increasing the labor or increasing tariffs coming out of Canada, that's going to hurt in the short term, right? Because the increased cost of lumber is going to raise prices on things, obviously. But the long vision there is to get more manufacturing and more of these items in our country being done. And so then we create jobs, and creating jobs gives more Americans more money in their pocket.
Exactly. And that's a good example, the lumber, because we're talking new construction right there, right?
Yeah.
So do you think, have you seen anything like, what's your thoughts on new construction in terms of how the wood tariffs and all that stuff's going to affect?
I think we're already seeing new construction start to get a little shaky. I don't know if you're seeing what I'm seeing. You have a better view than I do from the mortgage space. But, I mean, there's a lot of builders now offering some pretty sizable incentives to sell their inventory. So that usually is the precursor to it's slowing down for them, right? And I think in our area, we've seen a lot of construction over the last, 2, 3, 4 years. I think we're going to start to see it stabilize and slow down a little.
I agree. Yeah, we're already seeing it. Seeing So during when the market was really good a few years ago, builders were not given much incentive. They would always have a little bit because they got to compete somewhat.
Yep.
But they were one way that they'd make up money is they would cut commission, not like to 0.5% or 1%. I'm not going to mention any names, Lennar. And
that just fell right out, didn't it?
and then now they're not only dropping prices big time, but they are offering full commission and bonuses, even paying more commission.
Yeah, well, because for them, the more they can give away in commission and upgrades and incentives to close, and they don't have to cut that price. They're not setting the comp for the next deal, right?
Yeah.
So it makes more sense for them to pay you more commission or to give the buyer more closing costs than it does for them to cut that price.
Absolutely. My son is a construction manager here locally.
For Lennar?
Well, St. Pete, no, not Lennar, but he is for some big builders, and he's talking about like they've had some layoffs recently. And thank goodness he's pretty good at what he does, and he's very competitive. So he always tries to be in that top tier of construction manager. But they've laid off pretty much a lot. I mean, like I was going to say most of the construction managers below him that haven't scored as well or whatever. So yeah, crazy times in the construction market right now. It's going to be interesting. So on that note, what do you think about Elon Musk and the Doge and
Wait, is it $5,000 or $15,000 check? What checks are we getting here?
That would be nice, wouldn't it?
Yeah,
I would love a $5,000.
So I see all that floating around, but I haven't investigated. Is that really real? Is that supposedly going to be a thing?
I don't know. I haven't heard anything else about that.
Yeah.
Maybe Lona can look it up and advise us.
Lona's going to go digging. So as far as how it affects mortgages and real estate, I think in the short term, I don't see a huge impact on Doge but what they're finding, I find fascinating. Like, where we're sending money to countries for, what was one of the research on I think it was hamsters or rats for transgender. Like, what?
Yep.
Like, what is that and why? I mean, some of the stuff that they were reading off, I had to go fact check to go, is this real? Is this really what we've been spending our money on? But I do think as we start to get more conservative with where we spend taxpayer dollars, I think, again, the end result is that we're putting more money back into the average Joe's pocket over time. Mm-hmm. Again, everything's over time. It's not an instant fix. But as that starts to take hold and we're putting more money back into households, then obviously those people are in a better situation to buy a home. So I'm a fan of cutting wasteful spending, whether it's in the government, whether it's in the branch, whether it's in my own household. I mean, like, we should all audit each other, I think.
Sure, 100%. And I don't think that's a party thing either, or a party-specific thing. I think they should always be auditing and
Well, there should be a checks
costs.
and balances with anything, whether it be, like, your own household. You should, don't you once a year review your budget and go, hey, we've got these 42 subscriptions and we only use one of them. We should probably cut the other 40 off or 41 off.
Yeah.
So I think it's a great thing that we're finally digging in and going, where are we spending our money and how do we tighten the belt a little bit and make sure that this money's being spent wisely?
Yeah. Do you think any of this is having an effect on the current mortgage rates? Or what's happening right now?
So what you're seeing, right, what I think is driving a little bit of reprieve in mortgage rates is the uncertainty of the tariffs. People are kind of starting to panic of what's going to happen with the economy. Are we going to walk into a recession? And so you're starting to see some sell-off of stocks. And when people sell off in the stock market, where do they go? They go to bonds. And when they go to bonds, rates trickle down. Mm-hmm. So when we first started talking about doing this episode, the average rate in the United States was 6.8. It's 6.25 today, average United States. I think you're going to see, as more and more fears rise about the economy and what tariffs are going to do, I think you'll start to see rates continue to trickle down. Mm-hmm. We were talking before we kicked this off about what could swing it, what else could happen, any kind of black swan event. Do we enter into a war? Is there another pandemic? I mean, those are kinds of things that you can't forecast.
Interesting. Black swan event.
Black swan event, yeah.
Okay.
Like a COVID, that's something that turned the markets on their ear.
Okay. Interesting. And what did you think when COVID hit? What did you think was going to happen?
I thought that I literally told my partner at the time, we're in trouble. This is going to be bad, and we need to batten down the hatches, and we need to cut every expense we have that we can, because this is going to be bad. They're sending us all home. I think I was telling you the other day, I was the last one in the office going, is this really real? I'm still here doing mortgages. And then they were like, no, you must leave your office now. I'm like, oh, okay. What we didn't see coming was that it was going to spin the market so out of control that rates were going to dive, and that there was going to be this huge influx of people wanting to refinance. Mm-hmm. And then also with COVID and the lockdowns, people started migrating away from different states and flooding Florida. So we were the busiest we've been in our history during the COVID years. Complete opposite of what I expected to happen. I think complete opposite of what a lot of people in that first, when it first kicked off, everybody was like, whoa, what are we doing? So where a lot of the economy suffered during COVID, we flourished as a branch. Now, mortgage companies as a whole, that was a different ballgame, because there was a lot going on behind the scenes at mortgage companies, and it was a tough time for them. But for a loan officer, a branch manager, we were swimming in loans.
I got you. Well, did you consider all that before or after the toilet paper scare?
The toilet paper scare. Who does that? I still don't understand. I never understood that. I never understood, even when there's a hurricane coming and everybody buys every bottle of water in a store. You see people walking out with 20 packages of water, and you're like, there's one person in your household. How long do you believe you're not going to have water?
Right.
It blows my mind. But that scarcity mindset, I've got to hoard it all. Yeah, no.
100%.
I didn't do that.
Us Florida crackers stick together anyway. We would take care of each other.
I had one roll of toilet paper and, no, I'm just kidding. one roll of toilet paper, one thing of paper towels. It'll all be fine.
I'll be good.
I'll be good.
That's funny. But you thought during COVID that things were going to pop off and it's going to go the wrong direction, and went the opposite. And to your point, no one really knows what's going to happen with, are we going to have a black swan event? But I think it's interesting that you're bringing it up, because there are, I'll share the mortgage projections. I was seeing where the Mortgage Bankers Association, Fannie Mae, and Wells Fargo, their projections for Q4, if you average them all, it was 6.53% is what they think by the end of the fourth quarter. I just thought that was interesting, because that downward pressure on interest rates, I think, is a good thing, right? We need downward pressure on interest rates, downward pressure on insurance, downward pressure on taxes. All that would help us.
Downward pressure, period,
yeah,
right?
Downward pressure. So what's your thoughts on then overall interest rates then?
I think I've seen them change their forecast so many times in the last 3 years that I don't put a ton of weight into the forecast as much as I used to. Mm-hmm. I think we're going to see lower than that, between 6 and 6.5. And I say that only because I think a lot of the reporting comes out, and this is just my personal opinion from DeAnna's chair.
Yeah.
I think a lot of the reporting comes out and it's lagging. So we're looking in the rearview mirror. And in every market I've ever seen, or every cycle I've ever seen, we've always overcorrected, and the pendulum swung too far the other way before we caught it and got it back in line. So I think the economy is doing worse than we think it is. Than some of the reporting says that it is, because it's lagging.
Yeah.
And I think when we start to see the jobs reports start to really slim up, I think you're going to see rates come down faster. That's, and I debate this all the time with Rob, because Rob and I have different opinions on this, but I think that we're going to see rates between 6 and 6.5 by the end of the year.
Interesting. Because initially when you say, I think it's doing worse, you would think that, from a mortgage perspective, that would be a bad thing, but that's actually a good thing from a mortgage rates. Yeah.
Rates. So that's the part where we start talking about, what do we think is going to happen, with home buyers? If we walk into a recession, history shows us that rates will come down, because that's how they kickstart the economy again, right? Mm-hmm. But then you have, what is the perception of the American public, and how comfortable are they with their job? Do they feel like they're on the verge of losing their job? So you could get lower rates and have a fear that I might not be employed tomorrow. That guy's not going to go buy a house, right? Mm-hmm. So the question is, do we walk into a recession? If so, how deep is said recession? And what's the outlook from the American public? How are they feeling? Are they confident in their jobs? Are they confident And so there's so much that goes into what's going to happen there.
Yeah, exactly.
Yeah.
And that goes back to the whole building, getting products from our own country, from the U.S. versus other countries and stuff, and starting to self-produce things, right? That makes sense. So then here's a headline right now, actually. It says, the Senate Democrats brace to vote for a bill they hate to basically avoid the shutdown. So I wanted to ask you what your thoughts were on a government shutdown and how that affects the market. Like, is that something that you think buyers that are thinking about buying right now are kind of on the fence? Is that something they should be worried about, as a government shutdown? Or
in terms of getting a mortgage closed, getting a mortgage closed, you always hear, well, FHA is going to halt insuring. I've seen government shutdowns multiple times throughout my career. I've always heard the buzz that this is going to happen and that's going to happen. And truly, the only thing we've ever experienced is that when the IRS shuts down, we can't order tax transcripts. And in a lot of cases, we can't close a loan, especially if it's a self-employed borrower. We have to validate through the IRS. So there's usually a delay in getting those. But overall, the multiple times I've seen it shut down before, it hasn't halted the mortgage industry. So I'm not overly concerned about that.
Well, how many times has that happened to where it's even been close, where you were worried about tax transcripts?
We've actually had it where we've had to come out with policy to say we can where we can suspend the need for tax transcripts for this time to this time. So depending on what lender you're working with, what the guidance is from FHA, Fannie Mae, and Freddie Mac, if that were to happen, and then how the lender institutes that. Because guideline and policy is, to me, like the Bible. It's how you interpret it. So every lender will have a different take on it, a different process, and how you go through validating somebody's income if the IRS were to shut down. So it'll vary from lender to lender.
Okay. What do you think from a statewide level? DeSantis talking about property taxes.
Wow. That's a good one.
It is a good one.
It's a good one. I think there's a lot to think through there.
Okay.
And I think they're starting to think through that. Like, where does the money come from roads and schools? And are we going to increase the sales tax? And what does that do to the overall picture? But I think that would be very helpful when it comes to affordability in our state. So, again, you got to look at the whole picture and see if there's unintended consequences and how that's going to affect, like, services and firefighters and EMS and all of the things you need in a county or a community to take care of your public. Mm-hmm. How are we going to make up for those funds? But the more I read about it, the more I find that it seems like we have enough funds, right? Yep. So it's interesting how that'll play out. I don't think it's going to be something that happens overnight. But I think what I found interesting when you asked me that question, when we were discussing this, I was unaware of Amendment 5.
I'm unaware of Amendment 5, obviously.
Yeah, so Amendment 5, and I told my whole team, I'm like, how did we miss this? But so it passed in November of 2024, and basically the county can, if I read it right, the county can apply to tie the homestead exemption to CPI, or Consumer Pricing Index. And so as inflation goes up or down, so would your homestead exemption. So in theory, and I say in theory because I don't think it's been put into play, or it's not, it hasn't been worked out and we don't have proof of concept yet, but if inflation was going up, so would your homestead exemption amount.
I like the sound of that.
That's kind of cool, right?
Yeah.
But if inflation was going down, so would your homestead exemption amount.
Now, does homestead exemption matter, though, if there's no property taxes?
Correctamundo. But I was reading something today about another thought that is there when it comes to property taxes is increasing the homestead exemption and allowing it and giving exemptions on all homes versus like just the primary residence. Have you seen that article?
Nope.
I'll have to dig it out. But there's an article floating around about the potential of just giving a discount to everyone versus just the primary residence owners.
So instead of like eliminating property taxes, use the homestead exemption as a tool to do that, basically? Yeah. Interesting. That's interesting.
A lot of theories floating out around, but imagine if we were a state that took away property taxes. Mm-hmm. Right? Like
influx of buyers more?
What?
Yeah.
Like, I mean, imagine. And I think for our area, when you think about it, we do have high insurance rates. And so does that help the affordability issue we've got going on? Yes. And then there's I bought my house. Why am I renting it from the state, city, or county governments? Like, and when you look at the age of our population, people buy their homes, retire down here. They're on a fixed income, and their taxes keep going up every year, but they paid for their house in cash. That puts a squeeze on our elderly, residents. So there's a lot of pros to it. I think it's got to be well thought through, though.
So we pay taxes when we buy it. We pay taxes as we own it, and we pay taxes when we sell it.
We pretty much pay taxes on everything.
Right? I mean, we do need taxes to pay for our services, your police officers and your firefighters and your roads and whatever else, it goes toward.
And the rat experiment.
And
or something.
But yeah, in principle, I'm like definitely against it.
Yeah.
Like, so I love the idea of getting creative and figuring out ways I shouldn't be renting my property from the government.
No, I think, and all that forward thinking, we've a lot of our laws and a lot of our things are antiquated, because we always did it this way. We're going to keep doing it. But let's face it, society's changed. The way we work has changed. The way we raise our families has changed. And the cost of living obviously is going to continue to go up. So you've got to look for those creative solutions to give people, the opportunity to thrive even as the economy or the cost of living continues to go up over time.
100%. Mm-hmm. So I think that's a great way because Florida insurance right now is nuts.
Yeah.
Everybody that I'm working with, Lone and I are working with, like our buyers, most of them are like, we don't want to be in a flood zone, and I don't blame them. No. They're like, but when you, if you want to be in, for instance, Cape Coral, not in a flood zone, it's like, okay.
There's a little pocket over here, a little pocket over there.
That's exactly it. There isn't
and the flood maps changed too. Mm-hmm. So we more places in Cape Coral, for instance, are in a flood zone now than were previous to these hurricanes. So.
100%. Same way with Fort Myers and along the river there and things like that. So, I think it's going to be interesting. Have you heard anything on the insurance front?
So I've heard that actually Citizens is supposed to be bringing down their rates. I was reading an article today about that, but I don't think there's any reform on the horizon that I've read or seen. Mm-hmm. I have seen it stabilize, though. Right after those major events, we saw policies just, we had a lot of insurers leaving. I think we're past that now, and we're starting to see new insurers enter the market and a little more competition when it comes to rates. So they're still higher than they were, right? But it doesn't seem like – it seems like a good, healthy stabilization is happening.
I agree. I saw out of the DeSantis camp where they were talking about there's between 10 and 15 new major insurers in the state that came into the state here recently. So obviously more competition should have a good impact on the insurance, right? It's going to be interesting. We need to get an insurance person in here to really dive into that. But Florida Doge. So after
you like Doge.
Yeah,
you're like, I'm liking the Doge.
Yeah. So after Trump had and Elon talked about Doge, then obviously DeSantis jumped on the Doge, and now he's like, let's do it from a state standpoint. Let's save money there, right? Yeah. I think that's going to help us out big time.
What I said going in. Yeah. It's okay to audit everything.
Yeah.
You should.
So did you see that Casey DeSantis is wanting to put her hat in the ring for the next governor of Florida?
I see that as Ron DeSantis wants to put his hat in the ring for the next governor of Florida via Casey DeSantis.
Mm-hmm. Yeah. I don't know how I feel about that. I mean, I like DeSantis a lot. I do. I think he's been he handled
the hurricanes extraordinarily well.
That's what made me fly the flag, right? Proud to fly the DeSantis flag because, man, after the hurricane, how fast, he cut through the bureaucracy to get bridges,
relief to people and
relief and stuff like that. Amazing. And I think most people in the state are a huge fan of him because of that. But the whole dynasty thing, I think it's healthy for the government to have new blood, new ideas, new people in office. And so I don't know how I feel about the whole Casey DeSantis thing, but her competitor is, the other name is Byron Donalds, right? Yeah. So what's your thoughts on?
And he's out of Naples.
Right, he's out in Naples, right? But it's our district, right? I don't understand that whole thing, but
So I'm not a huge politics girl. We talked about that going in. I have opinions on politics, but I try to stay right here.
sure.
So, I don't have, I think it's a person that comes into our state has the best interest of the people that are living here, looks for opportunities to be creative in how we find solutions for our residents, meaning like what we were talking about with Doge or with how we do property taxes. It's that forward thinking that I think everybody should be looking for because everything changes. The world is changing. And so we have to start to look at some of the policies that we've had that are archaic and revisit how to bring this state forward into the future. So I think I don't have a dog in the race, so to speak. I think if it's Casey, then it's Ron, and so that you're going to have the same type of policies, same kind of thoughts. I'm assuming, unless they're a very divided household,
Sure.
right? So
They probably are.
No, I doubt it. But I think as long as the person has the best interest of the people of the state of Florida, and they're looking for those creative ways, like when we're talking about this insurance issue, it's going to take somebody with a really solid understanding of what our challenge is, and then creative, forward-thinking solutions, not we always did it this way, so we're going to continue to do it. Like I've heard things tossed around like consortiums for insurance companies and bringing in like where it's a shared expense among all policyholders. I've heard like wild things flying around, but is that something we should look at?
Discover Community Lending, founded in 2014 in Lee County, Florida, under the leadership industry veteran DeAnna Rivera. With over a decade of experience, DeAnna and her team have earned more than 3,000 local 5-star reviews, reflecting their commitment to exceptional service. Dedicated to enriching Florida communities, Community Lending actively supports local nonprofits through donations of time, talent, and resources. Believing that homeownership is the key to generational wealth, DeAnna strives to help families navigate the mortgage process with ease. Let Community Lending make your home financing journey simple and hassle-free. And that's why we recommend Community Lending. Our clients love them.
Okay, we're back.
Wow. Did you have a nice potty break?
I did.
Nice.
So what were you saying?
I was saying I don't really have a dog in the race when it comes, like, again, I told you I'm not very political. I believe that everybody should be treated equally, fairly, like not to the sensitive Sally side. So I'm more on the conservative side of things. But in the state of Florida, I think it's got to be somebody that's in here with a forward-thinking vision, be it DeSantis, be it Donaldson, somebody that's looking for creative solutions to our challenges as a state, insurance, property taxes, what we're doing with infrastructure is huge, water quality. All of those things matter deeply to the people that live here full time. So, I'm thinking whoever has those ideas, and it's not the old antiquated ideas. It's you have to get really creative. Like, what are we going to do about the water quality? How are we going to fix that? Because that's a huge part of our tourism, right? Like ginormous. And when you see the Caloosahatchee dumping into the, down by Sanibel in the summer, you've got to go, whoa, that's hurting not only our estuaries, our wildlife, but how are we going to fix that? And, we're kicking cans all over the place with it, but we still haven't found a viable solution. So I think brilliant minds with really, really strong background in how to solve problems like this and with a forward vision, and that would be the person that I would say should be there.
I love it. Most people I talk to are in the middle. They're not like extreme one side or the other. No. Generally, I don't hang with those people that are extreme one way or the other. Well, but I agree with you. So I wanted to share with you what I read, interestingly enough, on ChatGPT. Do you use ChatGPT?
I love me some ChatGPT.
So I asked it, I said, ChatGPT, please tell me everything you know, including fun facts about Casey DeSantis and Byron Donalds. So this is what it came up with, right? So it says, Casey DeSantis, early life and education. She was born Jill Casey Black on June 26, 1980 in Troy, Ohio, where I'm from. So I actually like that. She graduated from the College of Charleston with a Bachelor's of Science in Economics. And during her college years, she was a member of the International Economics Honor Society and competed on the equestrian team. Another thing, I like tagging these buttons. Like,
You're like,
grew up on a horse farm.
She's a horse farm girl. She's from your town.
Yep. So on one side, I'm like, I don't like the dynasty, the Bushes, everybody that, has these chains that continue on in government. But on the other hand, I'm reading this. I'm like, oh, I like that. I like that. So she was a member of the equestrian team. She's achieving runner-up at the Division I NCAA National Championships. Beyond college, Casey is a 3-time national champion equestrian, showcasing her dedication to the skill. Here's something interesting. Casey worked for the PGA Tour as a producer and on-air host. She also held various positions at television stations in Jacksonville as a reporter, a police beat reporter, weekend anchor.
Really? Mm-hmm. Huh. That's interesting.
And she got 2 Emmy nominations for investigative series and documentary. So, yeah, I had no idea she was so accomplished. But she also, let's see where it said that she, from an equestrian side, like she competed, I believe. Well, she was a national champion. So
you got all of this from ChatGPT. Does that not blow your mind?
Absolutely blows my mind. Yeah.
Like 20 seconds later, here's every detail about Casey DeSantis.
How long would it take me to research all that without
Yeah.
AI? Amazing. So Byron Donalds, you ready for this? Born October 28, 1978 in Brooklyn, New York. Byron Donalds was raised by a single mother in the Crown Heights neighborhood. He attended Florida A&M University and later earned a Bachelor's of Science degree in Finance and Marketing from Florida State University in 2002. Before politics, he built a career in banking, finance, and the insurance industries in Southwest Florida.
Pause there for a second. So what did I just say when I was like the person that has forward vision and deep understanding of our challenges, which include insurance?
Yes, 100%. I love that. And he was elected to the House of Representatives in 2016. So he's been there. He's been involved for quite some time now. So yeah, it's pretty interesting things I think are going to shake out. But I think it's very important to the state of Florida and to our real estate market here, right? We need, like you said, forward-thinking individuals that are going to solve these problems that everyone's talking about, i.e. taxes and insurance and water quality and all these things. From a water quality standpoint, I'm a scuba diver like you, right?
I'm a terrible scuba diver, by the way. But I love it, but I'm terrible. But go ahead.
Well, you spend time out on the ocean like I do.
I love it.
I can tell you there's been, and I've never been a tree hugger, like environmentalist type of guy, right? But no, I don't think anyone wants to see our environment get trashed, right?
No.
We want our future generations to have a place to live.
You want your grandkids and your grandkids to enjoy what we enjoy. Like, there's nothing better to me. That's why, Florida is so appealing to me. There's nothing better than to be in the middle of the ocean and just, you don't even have to dive or fish. Just being out on the water is amazing.
100%.
So you want to preserve that for future generations. Absolutely.
Yeah. And so when I first started scuba diving versus what I see now, like when I used to scuba dive on reefs, they were teeming with life and the reefs were beautiful. And I've literally watched the water quality in these reefs die and there not be any fish on them.
Look at the Keys.
Yeah.
Look at the Keys. Look at the bleaching of the coral in the Keys. And I'm not a tree hugger either.
Yeah.
Like at all. Mm-hmm. In fact, maybe sometimes not good enough when it comes to thinking about environment. My sister's the polar opposite. But just the sunscreens we wear too are those are all things that are affecting our water quality. But our big problem, right, is the sugar upriver. Yeah. We've got to look at those pollutants. We've got to decide, how to get away from those things and find something that still. I know, pesticides and lawn fertilizer. Everybody wants a green lawn. Everybody wants I'm that person. My sister and I battle this all the time because she's like, no Roundup. And I'm like, but I'm not torching all those weeds. So it's that scientist or that mind that comes up with, how do we have the best of both? How do we figure all of that out? And I think that's where it comes, this next generation coming in with, the amount of information that the people coming into the market, not market, but society now, they're so much more well-read and educated than we were. Think about it. Because of things like ChatGPT.
Yep.
I was sharing with you earlier, I did an entire PowerPoint presentation in under 60 seconds that looks like I spent weeks on it because of AI. So when you think about like finding solutions to these problems, you've got stuff out there like ChatGPT now. You've got all this artificial intelligence. We start to leverage those things to find those solutions. I think that's where it's at. But Gamma AI, if you're ever making a PowerPoint, holy mackerel, holy shitballs is what I think I said. Holy shitballs, like insane. Like you literally can take I had it all typed out, but I stuck my entire PowerPoint outline into it, everything, and it built this beautiful presentation in under 60 seconds. Then I looked over on the right, and it's like, just give me a concept and I'll build it. I'm like, are you kidding?
Yeah.
That's insane.
What was the presentation about?
It's actually, we're having a team building event next Wednesday, and so it's like a whole bunch of new concepts and ideas I have for my team. So like I said, I had it all written. I just needed to make it pretty, and that's something I would have spent 6-7 hours on to make sure it was perfect. And I mean, when I tell you 60 seconds, there's some edits I need to make, but very minor. Wow, giving you back the amount of time it gives you back. It's insane.
I love it.
It's also terrifying, but insane and terrifying in the same sense.
Yeah.
Like what does it look? I think about cell phones when the first iPhone came out. You were on a flip phone, all of a sudden you had a BlackBerry, and then the first iPhone.
Yep.
And how it fast forwarded so quickly from that first iPhone to where we're at today. What does AI look like in 5 years?
Yep.
What does it look like in 2? Let's look at what it looks like from when we first got access to ChatGPT to today. Back then, you were just putting in a prompt, you were getting some stuff. Now there's all these add-ons, and you can create video scripts, and you can do PowerPoints, you can create images just in seconds. It's fascinating.
It is fascinating, like you said, and scary at the same time.
Terrifying.
But I love the research side of it. I can tell you that.
Oh no, it's just. What about Casey DeSantis? Like
seconds. Yep, I love it. That's going to be an interesting thing to follow, though, and that's what I'm going to be listening for is their views and their thoughts on those issues and what their ideas are. More importantly, what they want to do about them, and that's what it's going to decide who I vote for. Right. So, what do you think in terms of? I know you mentioned interest rates you think are going to come down. So what do you think is going to happen from a Florida real estate market standpoint? Do you have any thoughts on that?
I think we're softening right now, but I think it's necessary. And I think the faster we get to the correction when you look at and you have a computer in front of you, so you could probably Google the actual number, but what was the increase in property values percentage-wise from, say, 19 to 21, 22? And yeah, we're going to give some of that back right now. I mean, we're already seeing it. How far are property values? Where are they at in Cape today over the last year? Down?
Well, I got the numbers here for all Florida, just the whole market, and I can dive into Cape Coral. But, as a median sales price for all Florida, as an example, because I think this is interesting, I pulled all the way back to 2008, right? So everybody's talking about, like you said, the market's softening or the market's crashing. It's just mind-boggling.
The crashing only happens if people don't have another path.
Yes,
right?
exactly.
And there's too much equity in the homes for people to just walk away. In 2008, totally different. I lived through that. So 2008, there were $30,000 homes, but that's because there were so many of them. And why were there so many? Bad lending practices. We were putting in people in homes that had zero out of pocket, 580 credit score, stated income, stated assets, and then we were expecting them to pay the mortgage. How easy was it for them to walk away back then?
Yep.
Today, you have well-qualified buyers in the homes. Most of them, I was reading a stat about how much equity is out there. You're not going to walk away. You're going to sell. Even if you don't sell for what you want to get out of it, if it's going to save your credit, you're going to sell way before you foreclose. So I think you might see foreclosures tick up a little bit just because of the economy as a whole. And there are going to be those people that just can't make ends meet. But what everybody's sitting waiting for is that massive crash we saw in 2008. It's not going to happen again like that.
I think there's going to be an adjustment, and we're going to keep adjusting, right?
And I think that's a good thing.
Yeah, me too. I would like to see prices come down a little bit.
I saw
It's catch 22.
my daughter-in-law sends me this TikTok, and it's like the worst properties, the worst place to buy, Cape Coral, Florida. And I'm like, okay, let's dissect that. That's actually the best place to buy because property's on sale, and it's probably going to be a little bit more on sale. As it's a buyer's market. We're flipping over. So if you're a buyer and you're looking for a dream home, like on the water with 400 miles of canals, well, Cape Coral is probably the place to be right now because I can tell you I lived there in 2008 when it was $33,000 to buy like a dry lot house. That same dry lot house today is worth $300,000. Like period.
Yep.
$350,000, whatever, wherever we're at. So we might be a little bit soft now, but it will go back up.
Well, interestingly enough, from a median sales price point, if you look at 2019, we're just under 300,000 for a median sales price in all of Florida. And in 2024, we ended up over 400,000. So that's a huge, the biggest increase happened from 2019 basically to where we are now, right? And it was a pretty steep incline, right? COVID, that black swan event that you talked about, right? So I almost don't want we don't need any more black swan events.
No swans.
Yeah, either way.
No.
Even if we don't want it to crash too much, but
No.
I want an adjustment. So that's kind of interesting.
I'm all for the equilibrium that we're looking for. The lower rates, softening of pricing, giving back some of that equity we built, but then bringing more buyers into the market as a result. Because I was telling you the other day, in 2024, I told more people in our community no than I said yes. And I hate to say that out loud because it's sad. But if you're a person in Southwest Florida earning between $45,000 and $50,000 and you're one income, there wasn't much out there that you could get into and afford unless you had the ability to get a cosigner or unless you had the ability to, you had that second income. And that's a lot of people couldn't qualify. So I think, if you're watching this and you were told no in 2024, it's time to revisit that, right?
Yeah.
Let's look to see what's going on.
Because interest rates come down, affordability goes up, right?
Yep.
Well, it's interesting because my son falls into that category, right? If I had to guess, he's making probably around 70,000. And you were just talking about before we hit record is like the average person that's coming in is probably making
45 to 50.
Right. You got your police officers, your firemen, like you said, your teachers and things like that. Well, my son falls into that category. And then we got other buyers that fall in that category too. Like one in particular that we were out showing, and he's like 300,000, right? That's his budget because of what he can afford. Well, there's not a lot, even with the market the way it is. But now that it's softening, more options are coming up.
Yeah.
But at the same time, it's softening. He's also worried about his job because he's in construction. So there's
there's that equilibrium I'm talking about. You have to, if we go into a recessionary period, there's going to be relief on rates, and there's going to be relief on, the prices are softening. So that's kind of bringing that all into line. But if the average Joe is afraid that they're going to go to work tomorrow and get a pink slip, they might sit back for a minute if they don't feel very secure in their job. So we need a soft landing. We need either very mild recession or a very soft landing without a recession. I think you get too deep into those weeds with a deep recession, you're going to scare some people away for sure because they don't know what's coming. They
100%.
don't. Yeah.
Well, so that on closed sales from Florida, so like in 2021, we hit 350,000 closed sales. This is single family, by the way. And then in 2024, it looks like we were just a hair over 250,000. So that's 50,000 less sales, which sounds like a lot, but you're talking about the whole state of Florida. And also, when you compare 250,000 in 2024, if you go back to 2000 and let's say that's basically equal to where we were in 2014 and 15. It looks like in 2014 we had just a hair under 250,000. Would you consider 2014 a bad market? I wouldn't either.
No.
So
it's all perspective too. I mean, if you're coming from a real estate agent side of things, and you got into the industry in 2020 and 21, it was raining contracts, right?
Yeah.
Like you couldn't be a subpar real estate agent. You could be and still make a very good living.
Yep.
But that wasn't the norm. That was the exception. That was that year that everybody waits for in their career. That's the breakout year.
Yep.
So if that's your point of comparison, you've got to relook at your business plan, right?
Yep.
And you've got to adjust. And then you have to understand how to navigate a normal market, which is what this is. It's getting to. I wouldn't say we're in quite a normal market right now, at least on the mortgage side of things. It's a little more difficult with the rates where they've been. But the strong survive that, right?
Yeah.
We learn we double down on our activities. We learn how to come up with more creative marketing and financing options for buyers, help like 2-1 buy downs. We talked about that a little bit. But it's that person that again goes right back to forward thinking, creativity, be that entrepreneurial spirit.
Yeah.
So yeah.
Another interesting stat is because you're going to see, like I saw someone share on Facebook, an influencer, he was talking about active inventory has increased like huge. And of course they always compare it to 2021 when it was at an all-time low, but we ended 2024 around 100,000 listings on the market. In 2021 there were less than 50,000. So, I mean,
what was 19?
2019, interesting, just under 100,000. And so it looks like
19 was the last normal market.
Looking at this line chart, which we'll pull up on screen for everybody so they can see it, but like we've been floating around the 100,000 active listings at the end of the year since 2012. So 100,000 seems like the number. Now, if we go way higher than that, so to put in comparison, 2008, you know how many active listings there were in Florida?
A lot.
Over 200,000.
Oh, easily.
So double where we're at now. So we got some room to come up still, right? So what do you think? You mentioned equilibrium. Do you think there's an equilibrium as far as interest rates go? Like, do you think there's that? What's that equilibrium that's going to be more toward a balanced market interest rate wise?
I think when you get into the low sixes, high fives, it's kind of the norm of where we need to be with the softening of prices. I think that it definitely expands the financeability of quite a few people.
And you think we can get there by the end of the year?
I think we can get in between 6 and 6.5 by the end of the year.
6
I'd love to see sub 6, but I don't think we'll see that by the end of 2025.
Not without a black swan.
I don't want a black swan or a duck or a chicken.
Or a duck or a chicken.
Or nope.
Well, you mentioned 2-1 buy down, so let's dig into that because that's interesting.
Yeah.
First off, why would we even bring up 2-1 buy down? And I think it's important for everybody to know that 2-1 buy down is a creative way for people to get into homes, right?
Absolutely, yeah. And right now, because inventory is ticking up a little bit, right? Sellers are wanting to get their properties sold. We are entering into a buyer's market. You can negotiate for the seller to put a portion of their proceeds from the sale into an escrow account. I'm going to try to really put this in layman's terms. So
please, for me.
Yeah. So if the rate today was 7%, and the seller agreed to participate in a 2-1 buy down, they would take a portion of their proceeds from the sale of their home and that would be given to the lender to put into escrow to subsidize your mortgage payment. So for the first year, you would pay as if the rate was 5%. Now, the recorded note is still going to say 7, but every month the lender would remove the portion of the payment, that the difference between 5 and 7, and apply it to your mortgage and just pull it out of that escrow account. They do that for month 1 through 12. On month 13, it would go to 6%. They would start to subsidize based off a 6% interest rate. And then by month 25, it's the full 7%.
Okay.
So what that does for people is if we know we're walking into a declining interest rate market, it gives them the opportunity to get into the house while the rates or while the prices are good, right? And this is cliche because everybody says it now, but date the rate, marry the house.
Okay.
They get in at a payment they can afford because of the subsidy from the seller, but then they're also they don't have all the competition for buyers, and then they refinance at the 25 months if rates are where we think they're going to be.
Worst case scenario, they keep the 7%.
And they qualified for the 7%. So that's important to push to point out. It's not like they're gonna if it's not a 2008 thing or 2006 thing where they're not qualifying for the fully amortized payment. They are. So they can comfortably qualify, but maybe the cash flow into their house feels a little tight. This is a way to give them a reprieve on that. But it's not going to put them in a very bad situation if they have to pay on the 7% because they qualify by all the agency standards.
Let's say you're in a 2-1 buy down at month 25. You don't want to be at the 7%, but that's still where interest rates are. Can you do another? Or no, you
can't.
Can you refinance in any other? You're just going to keep the 7%?
You're going to keep it at 7%. Now, you might be able to refinance into maybe an ARM. If I don't love ARMs unless you're very savvy and understand how they work and you know the risk associated with them, but an ARM could be a solution for you. I mean, if you were really in a pickle, you could try to do a pickle, like it's a DeAnna term. If you're in a pickle, like financially, like lost your job or some catastrophic event happened in your life, you could seek a loan modification. But as far as doing another buy down, no, that ship's kind of sailed.
Okay. Well, that's interesting though, because where I was going toward, where I was heading is, what's the negatives? Like, why would a person not do a 2-1 buy down? Is there any negative?
They're not negative, but goals. So maybe somebody's more payment conscious than they are cash out of pocket conscious. So which one do you fall into? Because you can't have both. So you could leverage the seller to maybe pay some of your closing costs, keep more cash in your pocket, or you're more payment conscious and you're more concerned about what that payment is every month. So instead of getting the cash towards the closing cost, you get the cash towards subsidizing the payment.
So if someone, as an example, is new on the job and they know their salary is going to go up and they feel comfortable with their job, that might be a good, let's say firemen, their salaries go up, police officers, their salaries go up, especially by year 2. So that would probably be something that they would consider, someone like that.
Oh, absolutely. So that's the whole point. If you've got a 2-1 buy down, you've got 2 years for your income to increase, your situation to change for the positive, right? Meanwhile, you're pulling from that escrow account, and this is one part I forgot to point out. So let's say you're in a 2-1 buy down, you're on month 13, and rates just dive. It's time, you need to refi, strike while the iron's hot. The money left in that escrow account is yours. So it gets applied towards your principal reduction, thereby lowering the amount of mortgage you owe. So it's not lost money. So you can refi anytime from the time you close to 2 years, and if there's any portion of that money remaining, you get it applied towards your principal.
Okay. I like it.
Yeah.
I like it.
And there's others too. There's a 3-2-1 buy down, a 2-1 buy down, and a 1-0 buy down. And one of the things, there's a program we have running right now that if you register for our Buyer Flex program, we give you up to 1% that you can apply towards a buy down.
I don't follow.
Yeah. So we're doing this is called a Buyer Flex credit.
Okay.
And the buyer has to register with us to do it. So it doesn't go out to everybody. But if they register and they qualify, they will end up with a 1% lender credit that they can apply towards their closing costs. They can apply towards a 1-0 buy down if they wish, or they can use it to pay agent commission.
Okay. Interesting.
To offset the cost of agent commission.
Yeah.
Now, it is up to 1% because there are some program limitations. So, and it's 1% of the loan amount, not 1% of the sales price. But it gives people that are struggling with maybe cash to close issues or the buyer's agent commission on some of those deals where the seller's not paying, gives them an opportunity to look at something different.
Interesting. Okay. Now, we were also talking off camera, and I thought it was interesting that people should know, but, when we talk about closed sales, active inventory, all that stuff, it's lagging indicators, right?
Yep.
And you get the, not lagging, the opposite, you get the forward indicators, right? Mortgage applications. What have you been seeing with mortgage applications?
They're ticking up. They're ticking up since we've started to see the rates starting to creep down a little bit. We're starting to see a higher demand in applications, which is a good thing.
Yeah, heck
It's
yeah,
very
it is.
promising.
Yeah.
We saw it back in October too. When we saw the rates come down under like the 6.75 range, we saw a tick up. We're seeing the same thing again.
Okay. In terms of creative financing, obviously you're a fan of the 2-1 buy down. Was there any other thoughts on that, or do you have any other creative financing ideas that you find yourself recommending?
Well, right now, Florida, condos, there's a lot of talk about how the condo associations are handling insurance deductibles and how that affects their ability to finance with a conventional loan. I think one thing that our viewers are watching, if you're thinking about buying a condo in Florida, there's alternatives. And so it's not I'm not going to say that you should buy every condo in the state of Florida. So this is, just be careful with this information. But like, let's say you're looking at a condominium and the one thing that's disqualifying it from Fannie Mae financing is the deductible on the homeowners insurance or the master insurance policy. But the condo association itself is fully funded. That's not that big of a risk. If they've got the reserves to pay for a problem, but it's still not going to meet Fannie Mae's financing sniff test. So there are alternative programs. Yeah, you have to put a little more down. Yeah, the rate's going to be a touch higher, but it gets you into that condo. And then you can always look to refinance when those insurance things stabilize.
Yeah, it's interesting you say that.
Or the rules change, because I think there might be a rule change that we see coming down the pipes. Like, for instance, there's no talk of it yet, but it's a big problem in the state because a lot of these condo associations have upped their deductibles to 10% to keep the HOAs affordable or the condo dues affordable for the homeowners. Now, in some cases, that's horrible because they're not fully funded, and that's a bad thing.
Yeah.
But if they've got ample reserves and they can totally afford the 10%, right now that's a disqualifier for Fannie. But I think over time, you'll see Fannie relax there if they can prove that they have the ability to pay that deductible.
That makes sense. That's where we're seeing the most turmoil, numbers-wise, is the condos.
Yeah.
Yeah, a lot of condos in the headlines, especially ever since the one condo building collapsed. And
Sunrise collapse.
yeah,
Yep.
wow. Holy moly.
Yep.
So
Do you hear that?
yeah, I hear it.
I wonder if everybody else does. That's a dog barking at the door.
That's the cute little puppy you got. So I want to ask you, like, what the Federal Reserve's role is on how much do you think they influence mortgage rates and things like that?
Well, they're the ones toggling everything right now. So their viewpoint, I mean, when Powell steps out and says anything, that spins markets one way or the other, right?
Yeah.
And, what they say after the Fed meetings really does have an impact on where the markets go. So how much influence? A lot. But they're looking at the same reporting we've been talking about, like the CPI. They're looking at jobs reports. That's how they're making the decision of whether they're lowering that short-term interest rate. The lower that short-term interest rate, and this is a misnomer a lot of people have, is that when you hear the Fed say we cut rates, people think, oh, mortgage rates fell.
Yeah.
They're not synonymous. They run in tandem with each other, but they're not synonymous. So when you see them start to toggle down short-term rates, so that's your credit card payments, your car payments, your HELOCs, when that rate starts coming down, now we're in tandem, you're going to start to see mortgage rates move down as well. And
Makes
the Fed's
sense.
obviously in control of all of that.
Okay. This would be an interesting take. Did you see where Redfin and Rocket Mortgage?
Yes, yes.
Is Rocket buying Redfin?
I think Rocket's buying Redfin. Yeah.
Okay. People say that that's a big, huge thing. What's your thoughts?
Same theme. The world is changing. We're in a very disruptive time in our industry. AI is coming on scene. Consolidations are happening. Is it bad? Depends on how you look at it. If you look at it with a forward mindset and you think, how can I leverage that? How can I find the opportunity in what's happening? Then I think you're going to be okay. But if you're the person that is, I'm going to do things the way I've always done them and I'm not open to change, what does 5 years look like from now? So that partnership really brings it all in-house for a buyer, right? They've got their mortgage company. They've got their real estate agent. They are used to working with each other. It's kind of like a builder scenario.
Yeah.
Does that mean it's going to be the best deal for everyone? No. And so as a consumer, you should still shop.
Yep.
You should still make sure that, maybe it's convenient. We love to pay for convenience as Americans. I mean, like, hell, I order my groceries in the grocery stores a mile down the road. And
Sure.
on Saturdays, sometimes I still do it.
Yep.
So if the convenience of working with the same lender that's, and realtor together works for you, cool. But if you care about what you're paying in closing costs, you care about the costs associated with the mortgage, then you want to shop it out a little bit and make sure that you want to pay for that convenience.
100%. And it ultimately comes down to, like, how much value the consumer feels like they're getting out of whatever partnership whoever they're partnering with, right?
Absolutely.
So they don't want to, in my opinion, I don't think most people are going to want to partner with a low quality lender or a low quality real estate agent.
Well, let's touch on that for a second. So when you're talking about Rocket Mortgage and you're talking about a direct to consumer, anything direct to consumer, you're talking about a call center environment and the level. I'm not downing anyone. I'm just going to say that the
difference
level
in model,
totally different model.
Yep.
So DTC, which is what we lovingly call it in the mortgage industry, DTC, those guys usually are recruited out of college. They're newly licensed. It's where they cut their teeth. So you got a really difficult loan, with a really difficult Florida property and you needed the nuances.
Yep.
That guy's probably not going to know what's going on.
100%.
But where you have a local expert that's been in the market for 20, 25 years, they're not working in the call center. Not to say there's not fantastic loan officers in some call center throughout America, because there absolutely are. But you get what you pay for. Yep. So I think just shopping and a point of comparison, who do you feel more comfortable with? Do they understand what you're looking for, understand your goals? Do they care what your goals are? Are they taking the time to find those things out? That's how I'm deciding who I'm working with.
100%.
Yeah.
I think my buyers will always lean toward that personal touch, that they want to be able to trust who they're working with. And so that's why every time we meet with someone for the first time, we tell them, hey, we want you to work with a Florida lender, right? Because, and you said the key word there was nuances. Florida is so different than every other state. And almost every time we have a deal where a customer says, well, my bank is doing it and they're in another state.
And the real estate agent cringes.
Oh my gosh, because those deals always blow up or there's always big time problems and it ends up being a disaster for who? The buyer.
The buyer,
right?
Oh yeah.
And then they just don't like the process and there's just all kinds of problems that come with that, right? So it's going to be interesting, I think. I just didn't see why people cared about that so much. I mean, I think me and you both been doing this for 20 years, right? And so if I think way back to when I first started, a version of this was the early versions of this was when RE/MAX would have a lender in office, right? And we've always tried to couple businesses together and make it easier for the consumer, right? And I think this is just a version of that, right?
It is, and I think also consolidating and giving when you if I work with you all the time and you know how my team moves, that dance that happens becomes very simple for everyone. So bringing Redfin and Rocket marrying each other, what that gives the consumer potentially is they're used to dancing with each other, and so it should go seamlessly if it's well executed.
Yeah.
But again, it goes back to, does it increase or decrease your cost, and how familiar or how experienced is the person in said call center that's handling that? So I think the perfect world is where you bring that type of consumer to a local lender that has the understanding of the local markets, like, what's going on with condos in the state of Florida. If you've never financed a condo in the state of Florida and you're a loan officer from Timbuktu, Michigan, have fun. Right. it's a different ballgame. And like you said, that affects the consumer because then it's usually very frustrating because they don't understand what's going on.
100%. Let's wrap it up.
Well, what happened here in the meantime?
Oh.
Yeah. We got a dog on the table now.
Looks like Truffles made it into the show.
Yeah, she did. She was barking at the door, and now she's going to mess up all my paperwork. But hi, everybody. Say hi to Truffles. She's the noise you were hearing in the background.
She can come in anytime she wants.
She's the mortgage pup.
She's our mascot.
Yeah, if you look around on Community Lending's website, you'll see Truffles is always giving great mortgages. So very itchy today.
So wrapping it up, in what we expect is interest rates to come down, and unless there's a black swan that can change that either way. I think Florida-wise for sales prices, what people can expect is I think prices are going to kind of be either stagnant or keep going up a little bit overall for Florida. And I still think Cape Coral is going to keep softening a while because of the inventory.
Yep.
Would you agree?
I do, 100%.
And we should probably be watching what's happening in Florida with the election and things like that. What's your final thoughts?
I think if you are in the market to buy a home today, now's the time to strike. You can't time a bottom of the market.
Yep.
And we do see the indicators that prices are hitting, a good spot. Rates are coming down. you don't want to wait until they're so soft and the rates are so good that everybody floods the market again, because then your ability to get that 2-1 buy down or that closing costs assistance from the seller gets diminished. So I think if you were a person that was turned down in 2023, 24, revisit the idea now. Look at your finances, make sure it's a good time for you and your family. But to me, now is the time to really start to begin to act.
Agree. I think once this clears out, the inventory like Cape Coral and Fort Myers, and that starts to clear out and interest rates come down. We were just talking about that 6% mark. When it gets down there, I think we could see a big boom again.
I agree. And if you throw on, let's waive some property taxes.
Oh yeah, then it's going
to the
go
moon.
nuts.
To the moon.
Which, by the way, when do you think we would see that if they enacted that?
Oh, I think it would take I would think at least a couple of years, wouldn't
Before it would take effect?
Yeah.
Okay. Well, I wanted to tell you I really appreciate you coming on the show, and I can't wait to have you back.
Well, thank you for having me. This has been a blast.
I think we shared a lot of great information today, so thanks for coming.
Thanks for having me.